Let's get in Dinshaw Irani to speak about what he thinks is in store. Dinshaw, the folklore, thank you so much for joining in. The folklore is that you haven't changed these specs that you're wearing because when you wore these, the markets did well. Now, do we have to thank your spectacles for this move that has happened?
Neeraj, thank you for having me on your show, and a very good morning to you and your viewers. Yeah, actually, Samir has told me to weld them to my head and not change my glasses at all. So that's why I keep wearing these. But frankly, I mean, I believe that this up move, I saw you guys arguing with the 25,000 because I don't have any doubts. Not today, maybe along the course of the week. But the fact is that this move, the government's move on giving out this GST 2.0, I think it's a conscious effort to not only right the balances, but I think towards consumption. I think they are also worried. It started off with obviously the new RBI governor coming and infusing so much liquidity in the system. Then came the budget where they upped the exemption limits for IT from 7 to 12 lakhs. And I think this is, and again, the kind of infusion that the RBI is doing in terms of not only liquidity, but also in terms of cutting off interest rates. And I think this is the final move that the government could have done. I remember the Pranab Mukherjee days when he halved the excise duty when India was going through a crunch. And you saw the up move that happened after that in consumption. I don't have any doubts in that. I think the uptick will happen, enough liquidity in the system, money is cheap. I don't have any doubts that consumption will come into play, and obviously it will start reflecting in fundamentals.
Dinshaw, what would be a very good morning, Tamanna here, and thank you for the spectacles and your great contribution to the bull run this morning. But what would you say to those who've been sitting with dry powder and sitting with cash? Because the thought might be that maybe I'm missing the bus. But is there much more to come, you think? Because this is just the first announcement. We're yet to see to what extent this plays out.
Yeah, so Tamanna, actually, I think the ones who are sitting with dry powder have missed the run-up, for the recent run-up, actually. And I don't see any reason for them to stay on that dry powder. I think they should move into the markets of liquidity. I mean, as I was saying, that we actually never keep any cash with us. And why is that so? Because we always believe that there's enough and more in this market, opportunities available in this market. Even when the market's on the way down, you have stocks like a Bharti, which doubles actually from the time the market has been on the way, not doubles actually, up 50-60% from the time the market has hit a last peak. So obviously there are obvious options available. So never sit on any cash, and if we are totally fully invested. And I think even going forward, as I was saying, that unfortunately this quarter, the June quarter, the numbers weren't that exciting. Despite that, the market has been hanging on in a very tight band, 1,000-point band literally, which is nothing as compared to what the one who was sitting on cash would expect. Obviously, it was the guys who were sitting on cash were looking at corrections of 10-odd%, which never came by. And I don't see that going forward also, because with this kind of reforms coming into the GST play, with GST being cut so sharply, I think demand will come back. And obviously, the September quarter may not look that great, because I mean, I'm told that the council meeting will only happen in September, which will reset the rates. So maybe till then, things will be on a standby. Obviously, the consumers will wait for a lower price to come by. But looking at the December quarter, I don't have any doubts that the festive season will ignite that fire on consumption.
Okay, so what are you buying then? Dinshaw, for people who are watching now, they're wondering now, what do we buy? You come back to the consumption story, which, didn't have core believers in that entire story because the results didn't bear through. But would you look, for example, at footwear players, and we were talking about it earlier in the day, who have been getting a tough fight from the unorganized market and players? You come down to 5% GST and you're in the game. Would you look at some players like that?
So not really, Tamanna. We're not changing our focus too much. I think we've been in the consumption play all along. In fact, very jokingly, we were talking about this morning that even though people will say, what, $2,000 on an AC, if that slab comes from 28 to 18, hopefully that is what's going to happen. Maybe they will not buy AC today, because anyway, it's pouring, winter's on the way. Maybe they look at it in summer, and what do they do with that 2,000 extra that they were planning to save? They'll spend it on food delivery, home delivery, quick commerce. So I think we're in the game already. I don't think we're changing our focus too much. However, having said that, I think the two-wheeler players should definitely look good going forward. We already had a Bajaj Auto with us. We're looking at another two-wheeler player, which we think will benefit out of this because a bulk of their vehicles are into entry level, and they should benefit with this kind of a move, with this kind of a cut in GST from those levels, 28 to 18% as such. So.
Dinshaw, what do you do? I mean, do you make a tilt of the portfolio away from capex-oriented names, if any? Whatever your exposure might have been in capex thus far, onto consumption. I mean, there is a bit of a pop that has happened, but is there merit in trying to tilt further towards consumption from where you are right now?
Yeah, Neeraj, actually, I think this is a long-term up move if it comes about. I mean, you've already seen last 4 quarters, including the June quarter, things have not panned out for most of the players. If anything, I mean, on an overall basis also, the earnings growth has been very minuscule. In fact, negative in the month of September, the quarter of September, and then mid-single digits kind of growth rates. So I think those will pick up. And obviously the ones which will push this will be, I won't call them consumption related names, but I think more of discretionary spends, the high ticket discretionary spends as such. Obviously, the biggest gainer in this whole move has been two-wheelers. But again, here, I don't think it's going to be a very sharp up move for these two-wheeler plays per se. I think it's more of discretionary spends which should do well. And frankly, I mean, Neeraj, we were never heavy on infrastructure in our portfolio. If anything, we were into equipment suppliers rather than infra players. I think infra will be obviously
we are at 25,000. We've hit the mark, and you know it's feeling like a celebration because of the painful journey here. And yes, 25,000 might recede, might go higher, and it's a number at the end of the day. But Dinshaw, just talk us through what the outlook has been for you in this space of a lot of question marks, right? What's going to happen with India? India's tariff situation just turned for the negative and still continues to be relative to what was expected. Q1 was better than expected, but really not that great after all. A lot of questions. They've clearly not all receded because of one big move.
So, okay, Tamanna, the fact was that why was Q1 such a dampener? I mean, I don't think it was beating the, by the way, Q1 again, the June quarter again, saw a cut in earnings for the index per se. So I don't think that was a good quarter to look at anyways. And what was the reason behind that? Obviously, it was because of the way the demand has collapsed on the urban side. The rural demand still has been picking up. You talk to all these rural focused companies and they tell you that rural demand is still holding on, and in fact it's turning better with the monsoons being so good and obviously the inflation coming off so sharply as such. But urban demand was a laggard because of obviously the fact that discretionary spends, I mean, as in the unsecured lending had gone down quite sharply because of the way the RBI was looking at that particular area. And I think that has now picked up. So I don't see any problems in that pickup happening again. Having said that, as I was completing my sentence earlier, we were never infra heavy. We were only into ancillaries which are supplying to infra players. We continue to be there. That's not a big portion of our portfolio. All along, we were very clear that it has to be a domestic focus game. We were never into China plus one or PLI plays as such, because we believe that that story, I think we left that bus long back. I mean, I don't think we can pick up from there as such. It has to be domestic focus plays, and that's why we were always there in that segment. And that's why at this point in time, we don't even feel like changing our portfolio. I think we are fully invested in areas where we are very comfortable with. Having said that, you talked about tariffs. Tariffs again, I mean, I don't think that 25% penal tariff is going to come about. If anything, I think that will be forgotten as such. And 25% tariff that we are at today, I think that also will be negotiated on the way down, because I don't think US can do without the kind of apparels that we have to supply to them, and precious stones and gems and jewelry and all that, because that's the only area which has been impacted. The rest all has been kept out of that list as such. So that also will come off. I think we're in a very good spot today.
Dinshaw, now FI is 92% short. Assuming that the conversation between US and Russia and US and Ukraine, etc., all go well, right? Then you make a case that the Nifty could rally further. Could there be short covering that could come in, or you reckon FIs could stay short? Part one. But if there is short covering, would you look at a risk on airlines, telecom? You mentioned Airtel, right? Does so well at all times. Do you think that comes into play now?
So basically, Neeraj, the fact is that the excess money is lying with the consumer anyways, in the sense that he'll save here again, whatever he wants to buy, he'll get it cheaper. And obviously there's a purse which is available for him for further discretionary spends. So obviously there's the biggest gainer would be the tourism, domestic tourism sector. Aviation is a part of that. So I don't see a problem there. Having said that, I think that on the FI front, I think they're waiting on the sidelines. Already you've seen that S&P, despite all the problems that we felt India is going through, they upped our rating. Well, a notch, not too much, triple B minus to triple B, which is pretty positive. The FIs look at such things, right? And they will obviously wonder what's happening out here. Things are looking pretty okay. GST's reforms has happened. In fact, rates have cut off. Obviously, they'll look at India again. I don't have any doubts that they'll come back in. I think the trigger that they're looking for is demand uptick. Obviously, earnings growth. We already were re-rated a lot. We were re-rated to 24, 25 times forward earnings. Now back to around 23, 22 and a half, 23 times forward earnings. But the fact is that this earnings re-rating had happened on the back of obviously growth in earnings, which tapered off for the last 4 quarters. Again, I'll put in a caveat. I don't think September will be anyway a great quarter, given that the demand will taper off. People wait for the GST changes to happen before coming and buying again. But having said that, even if September remains constant as compared to what June quarter was, you will see a very healthy growth rate, because last September was a negative quarter. So I don't think they will wait too long. I don't have any doubt that they'll come back into India. In fact, we run a FII portfolio, also the offshore fund, and there we've seen constant additions happening. So I don't have any doubts that things will come back on even keel for India also on the FII front.
I'm just wondering, and I'm going to come to Dinshaw on this, and then maybe quickly ask Pankaj also this question. Scenario painting. What could be the fly in the ointment right now is that this talk with Zelensky doesn't go well. Trump changes his mind, says that he wants to put these secondary tariffs on China, and India can't do so much on China, and continues with India. Is that the worst case scenario? And would that impact the mood that we're seeing today drastically? Dinshaw, to you first.
Okay, so here's the thing, right? Even the 50% tariff, by the way, S&P upgraded the rating for India even before Trump met Putin, right? Yeah. So it was obvious that they also saw GST, that.
Yeah.
So they all, and before GST, right? And they also saw that, look, 50% tariff on US, I mean, for US exports, I don't think that impacts us too much. There's a 40, 47, 50 odd billion dollars, which is at play on that tariff front. So maybe that is the worst that you may see, but I don't think it's a market dampener per se. Obviously, sector specific, there'll be a lot of dampeners, like textiles, exporters, those will be the biggest impacted as such. And obviously the processing units in out of Surat and stuff like that, jewelry processing, they'll be impacted to that extent. But I don't think it'll be a big dampener for the market. The bigger dampener would be if this kind of a infusion by the government in terms of incentive by way of cutting GST, that does not impact demand. I think that will be a bigger dampener than anything else as such. Having said that, one thing I want to clarify, FMCG was already at 18%. So I don't think FMCG is the right way to play out this kind of a move in the market per se.
What is the right way?
I think obviously the financials, which are the biggest beneficiary here, having said that, because obviously when I said that consumer discretion will come into play, you don't have to take a bet whether they'll buy AC or they'll buy TVs, big TVs or cars. These are the guys who are, they're funding them as such. They're already upping their NIMs. I mean, they were impacted because of the cut in interest rates. And they're already, you're seeing that impact being passed through as such. And they're pretty steady there. So that's one. Obviously, the new age companies, the platform companies, they are the ones to play with. They're all consumer facing and obviously market agnostic, because they're like there on the platform where you can go and pick up anything you want as such. So these are the two big bets. Obviously, hospitality is another one, be it to say hotels or aviation. I think these are the ones that you want to play with as such.